Hey guys, Tyler here. Just yesterday, the Consumer Financial Protection Bureau came out with a proposition for a new rule that would affect mortgage holders moving forward in light of the pandemic. See, as it stands right now, there have been over 3 million people that are delinquent on their mortgage and 2.1 million that are over 90 days delinquent. And so many people have been in fear about what was going to happen after these mortgages come out of forbearance. So back when everything happened, Congress passed the CARES Act, which allowed homeowners to put their mortgage into forbearance without any penalties, number one, without effect on their credit score. And on top of that, the payments that they didn't pay over the course of 6 or 12 months would not be due back when you come out of forbearance, but would be tacked on to the end of the loan. So there's two sides of everything that's going on though. Many people think that so many people were affected by COVID that putting their home in forbearance was an absolute must, that if they didn't do it, they were going to lose their house. The other side of the coin is that people did put their home in forbearance, not because they couldn't afford it, but because there was no penalty against them doing it. And that when they come out of forbearance, they're going to easily be able to continue their mortgage payments. You've probably seen tons of YouTube videos that have talked about the coming real estate crash, right? They've all been talking about it. It's all revolved around this forbearance issue that's going to be coming up in September. Now, September is a big date. September marks about 12 months from when the CARES Act was passed and a large number of mortgages went into the forbearance. Now, the CARES Act allowed people to put their home in forbearance for 6 months and then renew it for another 6 months. Well, that 12-month period, a majority, approximately 1.7 million of those, are coming due in September. So many people think that come September, people are going to go from forbearance and then they're going to go straight into foreclosure. And this bureau is trying to avoid that. They're designed to protect our interest, to protect the consumers. They're the ones that put the rules and regulations for these servicers on how long they can give loans for. And they're adding 2 new rules for a 1-year time period that is going to change or effectively eliminate any chance, in my opinion, of a foreclosure crisis. Now, there's 2 things that I really want to bring up on the rules that they are suggesting. Number 1, they're going to restrict any servicer to put notices of foreclosure on any property, period, until the end of 2021. Now, this is a big deal because that means nothing is going to happen on September 1st. Nobody's going to be foreclosed on, or no notices of foreclosure will be given. But they're doing this for, in my opinion, a very specific reason. They're allowing servicers, banks like Wells Fargo, Chase, Citibank, to offer modifications on these loans. What they're saying is, if somebody is affected by the pandemic, 1, you can't put notice of foreclosure, but you also need to offer them the ability to modify their loan and extend their payment on their loan, to extend their monthly payments up to 40 years. So this was just announced yesterday. Right now, it is currently open for comments. It's not a rule yet. They're having it open till the end of May for comments from these servicers to see if it's something that we're going to proceed with. The odds are, because it's backed by the Biden administration, we're going to see this all the way through. So that means if you have been affected, you can ask for a 40-year mortgage. You, on top of that, won't have to pay any fees. If you're behind on your payment and you've acquired late fees, well, guess what? If they accept your modification, which they are required to, they remove those completely. So now it comes back to this 2 sides of the coin, in my opinion. You have the people that have been truly affected by the pandemic, and those that are taking advantage of those government policies to put themselves in a better financial position. Think about it. There has been so much fear surrounding this pandemic. Everybody everything's going down, and so much fear has been perpetuated that let's just say me, for example, who I'm able to pay for my mortgage currently, think, well, what happens 12 months down the road? Well, I don't know. Why don't I take advantage of the CARES Act right now and put my home into forbearance with zero penalty, save my money? Maybe I should invest my money or do something else with it because, hey, why not? I have an extra $2,000 a month now that I can use for whatever I want. Why not? Those people now could extend their mortgage another 40 years and keep the money they've taken out, put it in the stock market, use it for other investments, stay in their home, or they can sell their property. Then you have the other side of the coin, those that have honestly been affected. And is what is driving all of these policies right now is those people that truly have been affected. And to be honest, I'm grateful that the government is doing what they can to protect these people that have truly lost their jobs, that have truly been affected by the pandemic. The last thing that I just want to note here, the fact is that the real estate market has increased year over year by 11.1% nationally. So the chances of their home increasing in value from last year to this year is tremendous. You think those people are just going to throw their home up, let it be foreclosed on? No. They would end up selling their home and pull out all the cash they have on the property. So we were probably not going to have a foreclosure crisis anyway because those people would have so much equity that they would want to sell their home and get the equity and not lose it. And in addition to that, we have so many buyers waiting for homes to come on the market that this inventory that potentially could show itself is just going to be eaten up completely by the sheer demand of buyers waiting for something to come on the market. So I gave you my opinion on where I think we're going to go. This is a phenomenal new rule that is open for comment right now that has a potential chance of being passed. And if it does, it's going to bring a fresh of breath air to those that have been truly affected by the pandemic and a way out. There's going to be light at the end of the tunnel. And that means, folks, that the real estate market is not going to be changing. The real estate market is still a strong seller's market and is going to continue in that way for the foreseeable future. So check out this video here where I talk about all the different strategies on getting your offer accepted and things you really should consider in this market to make sure you have the best chance and the things you need to be thinking about if the market does in fact change 5-10 years down the road. Guys, my goal in this channel is to really help you and inform you. If this was helpful, please hit that subscribe button, like this video. I appreciate it, love you all, and I look forward to seeing you guys in the next video.